Hey, good morning, everybody. Welcome to Wednesday, June 26th. Just a couple more days and June will be over. We'll be halfway through this year. I want to thank you for joining us today as we get ready to speak with Dave here in just a few moments. But I do want to remind you about our free report on retirement strategies. You know, retirement is one of those things, it's kind of one and done. You need to get it right the first time. Don't mess it up. So we put together this free report on retirement strategies. All you have to do is two ways to get it, folks. You can text the word retirement to 863-285-3815. Or if you look in this post, there's a direct link that will take you directly to there. All you have to do is click on the link. It'll take you right to where to get the report on retirement strategies. So I make that available to you. Hope you'll take advantage of it. Dave will be with us in just a few moments.
5.7 Light FM. Rihanna's there. Good morning. Howdy, buenos dias, V8s, and all of that. It's 8:38:22 here before 9. Let's check in and find out what Wall Street is doing to your retirement funds. Yesterday wasn't pretty. If the rhythm holds, today might be. Let's go downtown and find out. Statler Financial Services offices and Phillip Statler is standing by. We were noodling it through with almost no time left on the record, Phillip, as near as we can come up with. Probably the big dive in consumer confidence reported yesterday kind of contributed to a 179-point dip in the Dow. Is that a fair guess?
I'm thinking so, because it came out quite, as you and I were kind of finishing up yesterday, along with new housing miss too. We had a pretty good sized miss on new home sales. They missed by about 55,000, which was about an 8% miss from what was expected.
I was kind of looking at the chart and seeing that it started out okay and then pretty much declined through the day. That kind of indicated it was the morning reports that were causing it. Add to that the fact that our argument with Iran is getting more and more juvenile sounding at every time. The tweets going back and forth at statements between the president and the Iranian leadership are starting to sound like the war of words we were having with the little dweeb over in North Korea a couple of years ago.
Yeah, it was. You know, it's really sad when we get companies and countries really starting to call each other names.
Absolutely. It really, at times, the behavior of international countries when they start getting into arguments really sounds more and more like second graders on a playground than they do grown adults actually playing with life and death matters. And it gets impatient. And I got to believe that if I were on Wall Street throwing a lot of real money around, that would make me nervous as well. We start the morning out with some, well, let's call it interesting news, because while we don't have what they were expecting on the core number, durable goods were an unpleasant surprise last month, weren't they?
Yeah, they really were. They obviously depends on who you look at as to what was expected, but my folks expected a minus 0.8%, and it came in at a minus 1.3, which is even worse than that. I was looking at CNBC. I'm not sure exactly where they're getting their number from, but they only expected a 0.1% decline. So for them, it was even a bigger miss.
And and they revised April downward as well, which was a disappointment, if I remember correctly, in April. The reason I kind of hedged it a little bit, and the reason it might not be causing a major sell-off on Wall Street this morning on the futures, is that core shipments, once you get rid of things like airplanes and the like, actually grew by 0.7% last month. And while we don't have an expectation on that, it kind of, let's say, softens the blow a little bit, maybe.
Well, yeah, and I think the other thing that we know what's really pushing the futures this morning is the Treasury Secretary's statement coming out and saying, hey, we are 90% of the way through with this Chinese deal, and there's a path to completion. Now,
and we call that a spoiler.
Yeah, the last 10% can be tough as nails to get through, and it may not actually happen, and that's the problem with this good news, bad news stuff.
Absolutely. It does kind of play into something we were predicting at the beginning of the week for the first two episodes of this week's efforts, that really we're going to be driven by the rumor mill out of the Chinese trade negotiations with the G20 at the end of the week, and the promise that President Trump will meet Chinese leader Zheng, whatever his name is, at the G20. We're really kind of trading on every rumor and every statement that comes out of Washington regarding trade as being our biggest driver.
Well, we are, because we're at the end of earnings season. There's not much else to really drive the markets other than macro stuff and the rumor mill, because really a lot of the macro reports are done coming out too.
Yeah, that's pretty much it. I mean, durable goods, pretty much, except for our routine unemployment figures that we get for first-time claims tomorrow. We're going to be pretty quiet for the rest of the week, and talking about what's going on with Iran and with the G20 and with China and the things that we've been talking about incessantly for the last 6 months, right?
Exactly. And so, not much else on the big front. We do have a couple companies that have reported, and some household names at that. We have General Mills, big company. The big cereal maker, they beat by 6 cents a share. However, their revenue was below forecast. They said they're getting hurt by lower snack demand in North America. I got to think maybe that's the big, carb deal. People trying to cut down on carbs, and that really doesn't help General Mills at all when it comes to snack foods. They're trading down this morning about 5%.
I was wondering what the Sam Hill happened, because I saw it go across my ticker that they beat on earnings per share, but I've got them on my big loser list this morning. Revenue off, that doesn't help a bit.
No, it doesn't. And let's face it, year to date they're up 37%. So it could be that news followed by some profit taking. Most likely is what's affecting their stock today. Then we had FedEx come out. Now FedEx, they beat also. By about 16 cents or so a share. Revenue was slightly above what their bad forecast. But now here's the kicker for them. They warned that the U.S.-China trade dispute is going to have a problem. It's going to have an effect on their revenue, as well as their contract with Amazon is going to end. And so that's going to hurt their fiscal 2020 results. Now, it doesn't seem to be hurting them this morning, because their stock's been trading down significantly, but they're up 1.8% this morning.
They were a newsmaker, I know, and a couple of days ago as well, when they got into a disagreement with the Chinese authorities over their holding some responsibility for enforcing the boycott back and forth of various goods going back and forth between China and the United States. Federal Express says they don't want to do it. Both governments are saying, yes, you do. And it kind of puts FedEx in an awkward position on that front as well.
Yeah, it does. And so, but their stock's been getting hammered pretty much this year. And so that's, it's, I guess, a breath of fresh air that they actually beat on profits. And so they're trading up a little bit this morning. Now, the last one I have is Micron Technology, the chip maker. They beat by 26 cents a share. Came in with a profit of $1.05 a share. Top line results exceeded the analyst expectations, and they said they're expecting demand for its chips to rebound later this year. They're trading up a little over 8% this morning.
I was wondering what happened with them, because in addition to being on the top of my big winner list, they're also the leader on pre-market volume, which means something exciting happened. It was a darn good report and good guidance, I gather, huh?
Well, I think so, and they're down for the last 12 months about 39%.
Wow.
Yeah.
They could stand a little growth, couldn't they?
Absolutely.
So setting the table for the morning, it was an off day on Wall Street yesterday. This tinge wasn't even pink this time. Dow was down 179 points, NASDAQ down 120, and the Standard & Poor's was down 30, backing off from those bumping our nose on the record levels that we've been at. We're 45 minutes before we open up this morning. Phillip, are we seeing any recovery this morning?
We are seeing everything in terms of the markets in green. However, the green has relented as the morning has progressed. It's not as high as it was when I first started following it this morning. The Dow's up $79 right now. The S&P 500 is up 9, and the Nasdaq's up 38. We've got gold and silver both taking a little bit of a break today. Gold's down $5.70, and silver's down about 1 cent. So, and then we got that favorite thing we like to talk about, crude oil. Man, Dave, we are getting so close to 60. It's not even funny now. It's up to $59.04 a barrel, 2% higher than what it was yesterday.
Yep, some of that byproduct of second graders in a playground screaming at each other across the Gulf of Hormuz, I got to believe, right?
I think so. It's just a lot of stuff happening, and crude oil's in the crosshairs.
I hear you there. Interest rates actually are recovering by a little bit this morning, but no great change from yesterday. World markets, Asia, for some reason, is all off at the close this morning, even with the rumors of progress on the trade deal. Europe responding favorably. Their markets are all up this morning, 45 minutes before we open. Phillip, somebody needs some advice to look at a portfolio and help gauge the safety net that they got for their retirement. How does one find you on the phone?
Hey, now's a great time to get a financial x-ray analysis of your current portfolio to make sure you don't have too much risk. To schedule your free no obligation appointment, call us at 382-0037. We still have our report on retirement strategies. Great time to look at those 5 retirement strategies you need to look at. You can get that simply by texting the word retirement to 863-285-3815. If you follow us on Facebook, you'll see a link in our post on Facebook where you can link directly to it. And then follow us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and streaming that station at newstalk730am.com as well. Phillip, thank you so very much. Catch you in the morning, all right?
All right, man. Thanks. Talk to you soon.
Thank you. 105.7 and Statler Financial Services own Phillip Statler there.
Who will be
Hey, again, folks, I want to thank you for joining us today. I appreciate you. Hey, if you like what we're doing here, please like and share our page at Statler Financial Services on Facebook and share this video with all your friends and family. Have a great day. Thanks again. Look forward to speaking to you tomorrow.